Alrighty. Let's jump out of here. Jump over here. Yes. So I've been warning about a possible lower low. That was just a cell phone picture too. Crazy enough. So let me delete all these stupid arrows off of here. Delete off of here. Come on, arrows. There we go. So we had this price action. It broke. Rewind a few weeks. I warned that when we couldn't break back above the 618 up here, if we broke this down, this trend line of the lows, we could see it return to 4,500. We did, and then it broke promptly down. Then we got this big giant down day last Monday. Recovered, came down, back up. And so far, this is only like a 3-wave move up here. So this is kind of a precarious place we're in right now. So we're hitting the 1272 right there. Let me zoom it up just a little bit. A few more candles. So we made this move up. And it was corrective, like it only had 3 waves. Made this move down. We've made this move up again. It's only kind of 3 big waves. And it's kind of in a precarious place here where we ended up at the end of the day here. And that 1618 and that 1272 are lining up right there at the top of the candle today. So I'm on full alert, full alert that this could roll over and come back down quickly. Now, it doesn't have to. This could be a breakout. If we get much higher than we are right here, it's set up to break out and go to that 5,500 level I was talking about before. And we can work the fib just a little bit here. Let's see, where's the... Let me zoom it out just a little bit more. Get my tool down here in the bottom, out of the way. Yeah. That thing's pretty much there. Yeah, so we're looking for a breakout to 49.60, 51.60. And that pushes up to 55.50. Now, does that sound crazy that it could go? Yeah, I mean, it's probably going to take a little bit longer. And it could take the rest of the year. I mean, it could come up here, find resistance there, bounce down, bounce up, bounce down, bounce up. It could take us a while. So right now we're in a precarious position, though, where we have to get through. Excuse me. Oh, excuse me. Sorry, blowing out anybody's speakers there. We've got to get through this zone right here. This has been a whole bunch of corrective moves up off this low, which is not bullish. But we got so oversold. We were like the most oversold we've been since the COVID crash. So yeah, this is future. This is S&P 500 E-mini futures right here. I use the futures because there's no gaps. Very few gaps anyway. So very cautious right here. Now I've had this orange box on here for a while. That was the zone where I thought we'd find support, but we didn't find support. We broke on through. So now we're back up to it. We got to get up through it to be bullish. So just keep an eye out. This could, like, we're in a dangerous place right here. It's kind of a coin flip zone is what I was calling it, from 45, 25 to 45, 35, which we're at 45.53 here after hours. So coin flip zone. All right. NQ. This big tech breaking back higher. This one has a little bit different shape to it, but it's still 3 big waves up, 3 big waves down, and then this move up here. So still kind of cautious. And we have this box that I had right there that we were just coming into. So if we can blow up through, then we'll probably head on up. And the targets on ES are like 18.5 and 19,000. 18,500 and 19,000. So lots to go up higher. Now IWM, this thing, this is Russell. Russell 2000, and then is the future RTY. This thing has this one big move up, kind of a sideways consolidation in 3 waves, and then the next move up, just busting through the 1272, just shy of the 1618. On IWM, that looks, we're coming up right into that 30-minute roadmap line. So we'll have to test it and see if we can break through. If we do, it could be set up to break out and go higher. So, oil consolidating right at that 88 level that I was looking for all the way back in the summer. Keeps testing it 1, 2, 3, 4, 5 days in a row, it looks like. Just keeps bouncing between the roadmap line and that 88 line. Where does the 88 line come from? Right there, 88.48 off this pullback. If we can bust through, we're headed up to 90 and possibly out to 93 or even up to 95. It's going to take a powerful move to break out of that, though, because we've been stuck right here for 5 days, but we haven't been able to drop and we haven't been able to pop. So it's like squeezing a watermelon seed. Oil could pop out. UCO is my preferred play on oil. Gold pull back once again. We kind of have this 1, 2, 3, 4 move now. Pulling back and retesting the roadmap line. If we can get some strength, that'd be a 5-wave up. We'd expect a 3-wave retrace back to the same zone once again, and then we could break out higher. We do have resistance zones up here around 18. Well, we got to get through these prior highs over here around 1830 first, and then break out above 1850 where we were a couple of days ago and just couldn't hold up there. And we tried to break out, couldn't muster the strength, came back down, right back to the consolidation where we had for the, for in December and beginning of January. We tried to break out, just couldn't hold it. So now we've got resistance up there, even more than we had. So we got to get up through that zone to get something bullish on oil. We did poke down through the trend line that we had going on the daily. Good grief, messy chart there. This up, this trend line of the lows, kind of busted down through it and retested it from the bottom. That is not bullish. So this thing, if it breaks back below this 1780 level with any kind of strength, it could be looking for that 1600 and move down to 1600 I've been talking about for a few weeks. Golly. All right. Bitcoin finally looking slightly bullish. Slightly. Can't even see it on the daily hardly. It's just sitting down here at the bottom, drifting higher off the low that it made back in January, 2 weeks ago, a week ago. Just kind of drifting higher. On the 30-minute chart, though, let's see if I can show this. Zoom it up, zoom it up. So right here, we made this spike high and immediately smacked it down. Today, we poked up through it a couple times. We need to get up above there, close above there, and actually get up through this orange box right here, which I think is the resistance we're just kind of testing into, which is off these lows back here. these spike lows, made this orange box here. And now we're just trying to get into that orange box. So Bitcoin breaking up through, say 40, above 42, that can be quite bullish. But right now we're kind of stuck in this under 40 zone. We poked up into 39 a couple times today, but we just can't get there. Tomorrow's a new day. We'll see what tomorrow holds on. Bitcoin. Ethereum is poking higher, outperforming once again. So that looks pretty good. Let's see where my right there. So on this daily chart, I have the Ethereum versus Bitcoin. It came out to the first target. I was hoping to get extensions. It didn't. It pulled all the way back. This prior consolidation zone. So now we're set up to test another run. So Ethereum is once again poised to outperform Bitcoin. It'll have resistance around this 0.08 level. It could possibly get out to a higher ratio than it was at 0.09 and 0.10. So Ethereum could be worth 10% of a Bitcoin if we can get that move on up there. All right. Interesting chart. This chart right here, LAC. Lithium Americas Corp. Now, this is a roadmap trade for my profit roadmap setup. Above this line right here, above 32, this thing gets quite bullish. I actually put a long-term Knoxville Trade Club trade on LAC also. Looking for it to stay above 25. So right now, I think that this chart, it has tremendous support right at the roadmap line. This orange line is what I call the roadmap line. It's just a combination of the 144 and 169 EMAs. We broke bullishly above it, came back, retraced to it. We drew the fibs in here. We do have resistance sitting right here at 35. So an aggressive entry would be a higher high breaking through this 32 area. A confirmation, a move up through 36 area, headed out to 45, 51. And some of these tend to get big moves when they actually start running. We can look at this move back here. See, we got out to the 1618 last time. So you could get 51 potentially this time. And if we got an outsized move, the 272, we'd be looking at 61. I think everybody knows lithium is big in the EV space right now. Like lithium ion batteries, lithium ion, all the lithium ion stuff. So high demand on this. It was a 3-wave retrace right into the roadmap line. 1, 2, 3. That's a bullish setup. So that's a chart to watch out for. All right. Requests. What y'all got? Who's got a ticker that you want me to look at? Nobody? LPX. There we go. There we go. I was gonna say LPX. I saw that first. That's a good roadmap trade right there. Potentially 3-wave retrace. Hit the 272 level. Bouncing off the roadmap line. Golly. Excuse me. So I'm going to say you got a resistance zone. Right there, you need to get back up through. Got to get back up there. Move back up to 75. Set you up to potentially get to 84 and 91. All right. See SoFi. That looks like it's going down. just about hit the target I had drawn on here last time I looked at it. That could be the bottom. Could be. Doesn't give me much to work with right now. It's below the roadmap line. It needs to come up, retrace to give me some sort of something to work with on SoFi. BBIG, heartbreaker. That's number 2 on FinTech's short squeeze watch list for the week right here. This is a nice 1-2 reversal. I say you need a move up and a retrace. This is what I was looking for. Delete, escape. So we had a move up, retrace deeply to the 786 level. Kind of bounced once, made a higher low. So this is a 1-2, 1-2 potential setup for an explosive move higher. The BBIG is actually set up quite bullish, but it's a high risk play. High risk, high risk. High reward too, but high risk. Full disclosure, I own about 10,000 shares, I think, on BBIG. So, I'm not saying play it, I'm just saying it could potentially break out. It's in this big orange zone. Got to get out there to really make a big move. And, you know, my targets, where would I have a target? Oh, go from the high down to the low, 15, 20. If you really got excited, 26, even 30. If we were talking super moves, you know, 47 to 75, but those are like, I wish. Let's be realistic. Much more realistic targets like 15. Alrighty, IBM. Well, it poked up through the roadmap line. Still stuck in this box it's been in for almost all of 2021. Needs to get out of the top or out of the bottom, one or the other. One or the other. And no big predictions until we get out of this box. Otherwise, it's just going to come up here, find resistance, head back down until it can get out. So no trend at this point. MARA, Mara. This one really better told story on this chart. We dipped down almost this 887, 88.7 level down here. Still holding a big 1-2 setup as long as we're above 1832, which is that 4 back here. 1, 2, projects us up to some quite lofty numbers for a 3. Triple digits, baby. I'm ready for it. All right. And we did hold above that, at 1830 level. So, all right. MRVL. That one's bouncing off the roadmap line. Now, what would I want to see on this one? I got lots of lines. Let's remove some lines. There's going to be resistance. Oh, look, it made a doji because it came up into that resistance today. So at the minimum, I want to see a move up above, say, 76 to really be interested in this one. Now, I did a 3-wave, 1, 2, 3-wave down to the 272. Definitely push some extensions. Didn't quite get that on the bottom. So you could aggressively get in right here around 76, 77. Needs to clear 81. And that sets it up to go out to like 102, possibly 113. Last time it had a retrace down into the roadmap line. It took it a little while to get going, but it got up at least to the 2618 level. So you could be looking for a move out to 144. Could take it a good long while, but you could get a move out that high. It could take the rest of the year. All right. Lawrence, let's see. Who do I got with me? David or Steven, could somebody give Lawrence some attention there on what he's asking for? Yeah, so I talked about a corn shortage today in the newsletter for those that read it. A potential corn shortage. It's due to the high price of fertilizer. Less farmers are planting corn this year. They're opting to plant soybeans. Now, what's that do in the end? It creates a soybean seed shortage in the short term. In the long term, it creates a glut of soybeans and a shortage of corn. Now, why are they going for corn? Why are they going for soybeans instead of corn? Well, corn requires fertilizer. Fertilizer right now is high priced. With the potential cost of fertilizer to grow your corn, the economics of corn are not sufficient, at the current futures prices to support growing corn and the cost of the fertilizer. So smart farmers, it's a business. Smart farmers are opting to plant soybeans that don't require the intensive fertilizer applications that corn does to produce good yields. And it creates, like I said, short-term run on soybean seed, and it creates, when the crop comes in, assuming it all, does well, we don't have droughts or floods or whatever that destroy the crops, then we end up with a glut of soybeans and a shortage of corn. Corn, being a feedstock in ethanol, can also drive up fuel prices as well as food prices. We derive a lot of our food from corn. So this ETF right here, looking pretty bullish, potentially about to break out. Now, if we zoom on out just a bit, and look at it on a weekly, for a lot of years, we've been in a downtrend on corn. Down, 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 down. So now this is a potential breakout to higher prices on corn. Now, I do see the potential for this to retrace back down and this could be a set of 1, 2, 3, 4, 5. We get a 5 wave higher, then a pullback. Something like a 50 or a 618 pullback. And if we were to break a higher high up in, say, the 25 area, find a top, retrace back down to this, say, 17 level, that could be a really good point to load up on the ETF for corn, which is CORN. Imagine that. All right. So you heard it here first. I don't know that it's specifically a trade to get in right now, but I got my eye on it. I'll keep updating on that one. GOG, I hear they're in for a 20 for 1 split. So it's going to significantly reduce the price of Google on a per share basis, but their market cap stays the same. More shares, 20 times more shares, same price. This one was looking bullish. It poked a little deeper than the roadmap line, coming back up through. Really needs to get above this price over here. Right in there, right in that 28.55, which, divide by 20 after the split. It may be more affordable to get into. All right. I know there's lots of stuff you'll want to see now. Excuse me. All right. Can't believe I talk about soy. My wife is has an allergy to soy. That's a anaphylaxis type allergy. So she's very much, not a fan of the soy. We joke about her being the enemy of soy. So we're gonna give you all an opportunity to listen about this IWM trade that I've emailed out for a couple days. I talked about in Discord. So my latest thing here that I've set up, and I've been kind of running this in the background for a while, and I'm giving you an opportunity to join out this test. We're going to call it like a founding members opportunity because it's not set up yet. I don't have the classes. I don't have all the content. I haven't even done a whole lot to figure out what you guys need to know to do this trade. So, but I'm giving you the opportunity to get in now. We're doing it at a rate that's below what the going rate's going to be when we launch this product in a couple months. And for putting your faith in me, we're giving you a lifetime access. Like no other fee, no other ask. You join now, you're in on the beginning. Now, it has produced trades like 61% gain in 26 minutes. This was right at the market open on 114, and then it got out, 26 minutes later, 61% gain. Now we've back tested this for 20 years of data, and it's 69% of days. It fills that gap, what I call the IWM gap, the same day. Now, we're going to get into all the questions here. So you get access to this bot. Now, what's the bot? The bot is a piece of Python code that I wrote that pulls live market data from my alpaca.markets account, which is an algo trading brokerage. It pulls that live data, and then it logs into Discord and puts messages about the status of the trade. Now, right now, I have it set to do that pre-market, and I'll answer some other questions about it in just a few minutes. So I've got some pre-canned questions. So I'll get to questions in the chat in just a few minutes. So you get to chat live with me though. And like I said, as a founding member, an alpha tester, if you will, you get lifetime permanent access, and you even get I added an extra little badge that you become a founding member, and only founding members that are in before February 10th get that founding member badge in Discord. So in reference to the other trades I do, what kind of trade is this? Is a roadmap trade, an echo trade? Is this any of those? No, this is a gap fill trade. It's just based on candle patterns, and it's just a trade I've watched for a lot of years. Now, what ticker is it? It is IWM, India Whiskey Mike. What is IWM? It's the ETF for the Russell. Why IWM? Because it tends to close the gap 69% the same day that it makes a gap. What's the gap? It's the difference in the price for the opening of one day from the close the next day, or close the previous day. So is this day trading? In the strictest sense, yes, it is day trading. We're in and out the same day. So how do you avoid the pattern day trade, PDT requirements of $25,000? Well, I trade in 2 or 3 smaller accounts. Now, for the month of January, we had members in there the whole month. This thing set up, I think, 11 times. 2 days, I decided not to do it, so it left 9 days. Out of the 9 days that I did trade it, I took a 100% loss on one of those days. The other 8 days, I made money. Now, how big are the wins? The smallest win I took, I think, was 20%, maybe 15%. The biggest win I took was 60-something%. We're still pulling together all the track record. So how much money do you need? I typically shop for an option that is in the 60 cent to $1 range. So you need $60 to $100 to do the trade at the one contract size. Is this a magic trade to make you rich? No, it's not a magic trade to make you rich. All trading involves a substantial risk of loss. You could lose your 60 bucks. You could lose your 100 bucks. You could lose every day for the next 20 days that this sets up. So this won't be in the pre-market. The market has to be open to trade options. How long have I been doing this trade? I'd say 5 to 7 years I've been doing this trade. What makes now different than the last 5 to 7 years? It's because I wrote this Discord bot, this alert bot that checks the status of the trade every day. Now, there might be a week, might be 10 days that this goes and doesn't set up the gap in a tradable manner. That's kind of boring. After a week or so, I forget to check it. Let's be honest, after 3 or 4 days, when I check it and it's not there, it kind of goes out of the back of my mind. Like I quit remembering to even go look for it. So I wrote a piece of software that goes and checks it and says, hey, this trade is set up today. Come look at it. And that's what the bot does. Can I just email or text the alerts? No, the Discord bot writes it in Discord. It doesn't email, it doesn't text. I don't actually even intervene to it. It puts the alert into Discord. So do you have to use options? No, you can use shares. Shares are a completely valid way to play this. Now, to turbocharge the return, options are the way I play it. Do you have to trade it every day? No, it doesn't even set up every day. Like I said, out of January, you had 4 weeks of 20 trading days. This set up about 11 days. So in 2 of those days, I chose not to do it. Does the bot give specific entry and exit alerts? Not at this time. It's not quite that smart. Working on it. I don't want to do something that causes the bot not to work. I'd rather have the trade than not have the trade. So I'm very careful about how I code up the bot and how I give alerts. So this is just phase 1 right now. The bot's going to get smarter. It's already gotten smarter over the January timeframe, just slightly. Fixed a few things. So it does not give specific entry and exits. It just tells you if the trade is potentially set up to do or not. That's the biggest part of this. So I'll take any other questions, but if you want to try out this IWM Alpha, go to jeffreytrader.com/IWM Alpha. Call my team, 855-454-0816. David Gilmore's in here, my sales team leader. He can hook you up too. So this is an exclusive opportunity. Like I said, this special pricing only runs through February 10th. It's been near 70% accurate so far. Like I said, I took 1 loss out of 9 days or something like that I actually did the trade. 21% in 3 hours, 52% in 29 minutes, 61% in just 2 minutes. The trade yesterday, let me pull it up. Let me find the trade from yesterday. Here's the trade from yesterday. Super tiny here. Let me try and make it bigger. So 25% win, 25% gain in 3 minutes right there yesterday. In at 9:31, out at 9:34, and the trade was done for the day. Nothing found at the location. Let's try it out. Worked for me. Make sure you spell my name right, Jeffrey Trader. Oh, Steven mistyped it in his link. Here you go. Steven retyped it. jeffreytrader.com/IWM Alpha. For shame, Steven. Yeah, we got another example on here in at 93 cents. Like I said, I shop in that 60 cents to $1 range, sometimes just a shade more than $1. out at $1.50. Now, the Fed day. Let me show you this craziness. The Fed day gave me a whole bunch of opportunity. Every one of these trades was a winner. See that right there? And it goes in reverse chronological order. So the start was down here, in at 97. Then I bought 5 more at $1.17. Then I bought 5 more at $1.04. Then I started selling $1.50. Sold more, another 5 at $1.50. So some of these I bought down here. Then I bought in again at 90 cents. Back out of those at $1.50. Then ignore the Groupon trade. Chunk at $1.50. And then I sold the original ones that I bought at 97 cents for $1.20. So all of those trades were profitable. It did take all day. You see the timestamp down here. I started at 9:40, 9:50, 10:30, 11, and then got out. The last ones at 3 o'clock. That was Fed day. What was basically a boring day. And that was in a $40,000 account. So not subject to pattern day trade rules. I did do the original trade in one of my small accounts. I got in the 97-cent trade and got out for like $1.30 in that account. So, all right. I don't like this. This trade is a manual trade. You got to do it yourself. This is I don't have, like I said, we don't have classes, but we're working on it. This is going to be a launch product. A product is going to be launched out to the world in a much bigger fashion. Right now, I'm giving you early access because you all are my loyal followers. So right now you have till February 10th. Normally, trade alert systems like this, we sell for $1,000 at least. The price that we're asking, $497 here, may be the 6-month price when we actually launch it. So right now, that gets you permanent access. We'll never ask you for more money. So this is a limited time offer. All right. What other questions you got? Let's see. That's a question for your broker, Paul. Like I said, this trade doesn't necessarily set up every single day. So while there's potential for it to be there every day, over the last 20 years, it was only there like 5,300 times. Generally, there's 220 some odd trading days in a year. I don't know what that multiplies out for 20 years, but it's set up about 5,300 times, and 69% of those filled the same day. We're adding a little bit of filtering on it. It is a short and long trade. We go up and down, gaps up, gaps down. The 20 years, it was about 60% lopsided to gap ups, I think it is. No, I'm not going to share all the secret sauce with you. I do filter the gaps. The bot filters the gaps based on my experience trying to trade it over the years. But if you jump in, I'm going to, when I get about 70 people, I'm going to do a class. We're going to teach all the stuff. We're going to record it. And that's going to be part of the members training when we actually launch the product. We've got it scheduled to launch maybe in March. Maybe. I've got a copy team working on it right now. They're running audits on the trades as I do them. So any other questions? General questions. I'm not going to tell you exactly how it works until you get in. I've already got the Discord channel. I've already got a ton of examples, charts. I can pop it up here and show you. It's got its own channel. And I've got all the history on it, all the way back to the beginning. Got charts and examples, fills. I put them in here. I've got a few other people that have been working with me since early. And here's the bot practicing the alerts. I put chart examples in here. The gaps over, like the close of the day before, that's your target. So, yeah, so you can, your max risk you can do is, up to you. Basically that's the, if you're going to do options with me, somewhere in that $60 to $100 is the minimum you're going to be able to do if you're going to do the option. And that's if it goes all the way to zero. I mean, if you want to close it out when you lose half of your money, you're more than welcome to do that. And then your risk is only half of that, like $30 if it's a $60 option or $50 if it's a $100 option. The bot is in Discord. If you want the bot alert, this guy set up alerts right here. He's a bot. It's just a piece of Python code that runs on my computer. It's not like some third party anything. I control the entire thing. Runs on my computer, in this office right here. So there's no secret thing that's, happening in the background. It's all my code. That bot runs on about 150 lines of code right now. Yeah, right now I don't have extensive, if you close it early, I usually go in, and it either works or it doesn't. And if it doesn't, I take 100% loss. Right now I'm ahead in all accounts that I've been trading in. So, here's one, January 3rd. I was in 70 cents, out $1.15. 2 minutes, 61% profit. I bought for $1, closed for $1.30. A lot of times I use the Tastyworks platform and set my profit target right upon entry. Now, do you immediately buy or buy a call or a put at the open? No. You have to wait for this reversal to show up. Sometimes you get a gap at the open and then it gets bigger. Sometimes that happens. You got to wait for this candle reversal pattern to show up. Sometimes, like right here, the 5th, the gap was closed pre-market. The 6th, there was potential to the downside. I missed it. Gap closed pre-market, gap closed pre-market, gap closed pre-market. So there's a bunch of days where the 7th, the 10th, the 11th, the 12th didn't set up. 13th, and then on the 14th, had a gap of $2.82. I took that trade on the 14th. Got in for 93 cents, was looking for $1.40. And got $1.50 on that one right there. $93.50. So the loss was 100% loss, the one I took. The wins, I'm just showing you, like they're all over the place. They're 20, 30, 40, 50, 60%. This day right here, the 14th, you could have gotten in for $1 or for 75 cents. That was the low. I got in for 93 cents. You could have gotten out for $1.60. That was the high tick. I got out for $1.50 on my fill. I just grabbed a piece out of the middle of this. Yeah, this one right here. I think that was the lost day. Bought 87 cents. Looking for $1.22. And yeah, that was the day that it didn't close. Pretty sure. Yeah, I didn't write anything else. So that was 100. That was the full loss day. I had 87 cents at risk. Never filled. That day, I believe I missed it. Didn't do it. Yeah, I filled at 78 cents that day. Yeah, there's the fill, 78 cents and $1.19. I don't try to do it with Russell or futures or anything like that. It's just IWM. IWM moves a little bit different than the futures. I don't have a way to test the gap fill for futures in such a manner. The options on IWM give this the turbocharge to make those outsized gains. All right. And there was not a very big gap on the 21st, and the gap filled pretty quick. And so on the 21st, I missed the exit the first time, and it came back around and got me in at 93, out at $1.28. That one took an hour and 6 minutes. Closed in the pre-market, so didn't trade that day. Gap down to 3. I was watching the futures. The IV was a little crazy that day. And I finally got in for $1.01, out for $1.23. That one's the day. That was the smaller account day on the Fed day. 10.26 in, $1.53 or 1.53 out. And I got back in some 205s and out and in and out. So, whole bunch of trades. I've been putting some extra trading and ideas in here today. I ran the bot twice because people asked me. And it said the gap on at 9 o'clock, the gap is only 0.24. It might not be big enough to trade. And then I ran it again at 9:24, and the gap had been closed in the pre-market. All right. That's how kind of how it works right in the moment. So go to jeffreytrader.com/IDM alpha. Get in on this. Give my team a call, 855-454-0816. Take it easy. I mean, we're giving you a nice cut rate. We're giving you forever. Like I said, over 20 years, this thing did it 5,300 times. It wins 69% of the time just on a back test. I've added some filtering to try to boost that up to even higher. I think we're getting close to maybe 80%, I think, with the filtering I put on it. So, any other questions? I'm not going to tell you exactly how it all works. We'll do that in the class when I get my people in there. All right. Well, I've been going longer than normal. Answered some IWM setup questions. We'll see you guys next week, guys and gals. Alrighty. Thanks, everybody. See you again soon. Stan, this is on YouTube, man. You can go to jeffreytrader.com/YouTube. Watch the whole replay. Up now, live.